Hello, everyone. This is Aaron Yoon from iFlip Invest, and joining me today is Jon Howard, a longtime veteran user of the software. Jon and I are going to hang out today and have a little conversation about his experience before, during, and after his time with iFlip. Jon, thank you for joining us today.
Aaron, thanks for having me. Appreciate it.
Absolutely. So my first question for you is, who is Jon Howard? Tell us a little bit about yourself.
Well, it's kind of interesting, Aaron. I spent my younger years as a institutional wholesaler for mutual funds and variable annuities.
Oh,
Uh,
interesting.
yeah, did a small stint as a VP at the regional bank as a financial advisor. So was very familiar with that world. I spent the last probably 15 years of my career, I've gone to self and work for myself and doing mainly real estate and other alternative investments. Um, just because I was in that world and it was not, it's a nice, stocks are great, but everything that's available is a retail product.
Hmm.
I can't get the kind of management that I could say at a Goldman Sachs or some of the big boys, unless you have, man, a minimum of 10 these days, it's $20 million for those guys will even talk to you. So, and that's really kind of funny because I'm at an off Wall Street's seminar in Dallas 3 years ago, and that's when I met Randy, and he told me about iFlip and what him and Kelly were doing, and I said, I've been looking for this for 20 years. I used to have years ago, before about 10 years before them, I had a private money manager that was available through one of the
Okay.
broker that I was working with. And it was like, okay, well, great. This is great. I'm going to put my money in there and they're going to manage my stocks and manage my cash position. And it's going to be great. Oh, heck no. It went
Uh-huh.
down 60%. And I'm going, what happened, guys? And so when I saw iFlip and what Randy and Kelly are doing, I'm like, this is going to revolutionize the industry right here. This is when the average person can get that kind of management and risk reward benefit. It's a great thing.
Yeah, I'm totally with you. I think your origin story of how you came in contact with iFlip is very similar to mine because I wasn't a money manager, but I was working at a hedge fund, and I know exactly what you're talking about. I was at a firm where in order to there was a wait list of people who had to have at least 100 million
Mhm.
to even for our hedge fund to even talk to you. So I know exactly what you're talking about. Um, and and I also met Randy at somewhat of an off Wall Street kind of investment seminar, right? And we were, because at the time I was more into like real estate and stuff. Very, very similar origin story to yourself. Now, I have to pry a little bit for someone with that unique of a background. You used to work for you used to deal with mutual funds quite a bit,
Yeah.
and we make it no secret here at iFlip that we feel that mutual funds are dated.
Well,
There's a better way to do it in this internet age, era with technology and mobile apps and stuff. There's a better way to do it, but yet the financial industry hasn't really evolved that much over the last, let's say, 50 years. Mutual funds is still where the majority of the money is, and we're somewhat critical of that. How do you feel about having had that background, and you know where we stand with people's financial advisors giving you wrong advice almost? How do you feel about the past, the industry you were in, and iFlip's general position and message on that today?
yeah, Aaron, I think it's a shame that some of these guys, and they're all good guys. I still have a bunch of friends. I know them. They have good friends, but they almost pass themselves off as money managers, and they're really not money managers. It's an asset management. So let's go buy 60% stocks, and guess what? Buy and hold and be in that because in the long term, it's going to work out best for you. Um, yeah, that works. That strategy has worked historically. I think probably it might work a little bit going forward. I think it's going to be tougher over the next few years for sure. But what happens is that, I had a client back in my financial advisors days, and I convinced her to go take some retirement money and put it over, and I think it was 100,000 in a great fund, but the fund really didn't act the way it was supposed to, and she
Hmm.
ended up losing like I think 30% of her money. And, again, I would say buy, just stay, it'll come back. And it actually did. But client emotion gets to, well, I may lose it all and I've got to pull out, and they get out at the exact wrong time. And so that's where I see that industry as they're not a bad industry. They're trying to help, but they just don't have the technology and the ongoing management that something like iFlip does. I mean, to be able, I mean, I've watched it through 2 cycles now, and a couple others really, but 2 major cycles
Mhm.
literally take you out months before. And it's so funny because I hear it in a room, because there's a lot of, in a room with a lot of people that are iFlip investors, and they're going, well, why aren't we in? Well, why aren't, in fact, November was a prime example. Well, it's going up. Why aren't we in? And sure enough, January gets here and it starts to drop, and people are going, oh, okay, I understand now. know? And so the portfolio's out. I mean, I think it may be 30% back in, but it's like 60% cash out, and it's been out all at one time. And I'm doing the red oil portfolio in there, so
Yeah.
it's in a little bit more than the other ships because of that particular market, but still the ability to set up 15 different portfolios and stocks, and now with the crypto coming in, if you want to get into that market and be able to reduce your risk,
Mhm.
I just think it far outsees anything that's out there. And
Yeah.
so I watch these markets, and I've watched it for 3 years now. And I'm like, Aaron, I actually use it as a cash position because
Okay.
because I know stocks have a liquidity feature that I can get in and get out of within 3 to 5 business days.
Sure.
Instead of at one time, a company I won't name was giving me 0.75 on my interest rate after I had sold a big investment,
Yeah.
a big real estate play. It's like,
Yeah.
okay, I put it in actually at the low after March of 2020 because I didn't have any stocks at that time because
Oh, I
there
see.
wasn't a portfolio that I felt comfortable with. I was going to put in risk my money that. All my money at that time was in real estate. And
Got it.
I actually put it over there and I said, okay, these portfolios work well enough that I don't mind risking a small downside for the potential upside, especially where the market was and blood in the streets at that time.
Got it. Yeah, I want to dig into that,
Yeah.
but just one clarification before we dive deeper into that. You mentioned that a lot of the financial advisors out there present themselves as money managers, but really what they are asset managers. Can you clarify the distinction as someone who has the background of that industry? Can you clarify what's the difference between a money manager and an asset manager, and why you would want either one?
Well, to me, a money manager is a guy that's going to take your whole portfolio and manage between cash, stocks, real estate, whatever type of investment you have. And
Right.
that's what I do personally day to day. I
Right.
look at it and I say, okay, I need a certain cash position to keep liquid. I need a certain liquidity that I'm going to have in 6 to 10 months, 12 months, and so on. And I have certain assets in real estate and certain assets in oil and gas, or certain assets in iFlip and stocks. So that to me is what a true money manager is. They're managing the total portfolio. What most of these guys doing, they are really asset managers. They're just telling you, okay, I want to go buy the S&P 500, so we're going to put it in this company's S&P 500 fund, and you want to have, let's say 60% over there. And I'm going to simplify this for the real, but and then you want to have 40% in a bond, in say a government bond fund, and they put you in that. And while that you may have a quarterly meeting, or typically it's usually a yearly meeting, and most people I know miss that yearly meeting, so it's an every 2 or 3 or 5 year meeting.
So
And
true.
yeah, and so what happens is you're looking at it, and all of a sudden your stocks have gone up way more. Let's say if you'd have done that from 20 to 22, your stocks are up way more than you're comfortable with your risk. You haven't readjusted, and so now you get a 40% drawback in some of the tech funds that are heavily weighted, that are in everybody's portfolio, and then all of a sudden you thought you had a certain amount of money, and now you got 40% less.
Right.
And so that's what I call an asset manager. The guy, they're trying to do a good job, but it's a buy and hold. They stick in and say hold. I was going
Yeah.
to say I actually have a personal experience from my mother for 10 years in a roaring stock market. And the guy said, no, you need to have more bonds. And I think when I closed her account out 2 years ago, her average annual return was 2.89% by all the mutual funds for 10
Oh,
years.
oh gosh.
It was ridiculous.
Oh man, it was the premise of that. The basis of that is because of, she was older, and so generally, when you're older, you're supposed to do more bounds, and he was just following that rule.
He was following that same rule, and we all know your viewers may not know, but bonds have really gone down in the last 10 years. Stocks have gone up,
Mhm.
so that heavily weighted bond portfolio didn't do her any good. And
Right, right.
she was needing 5% of that income off of it. So basically, she was eating the 2 to 3% of her principal every year.
Oh, geez. Okay, yeah, and that's such a common story too. I think we're at iFlip, we're big believers that it no one's going to care about your money more than you do. So you have to at least learn to be somewhat of a basic level, rudimentary money manager of your own assets, your own portfolio. And that's where iFlip comes in as a tool for at least the financial markets, so the stock market stuff. Um, we don't have things like the fancy derivatives and the leveraged stuff yet. We wanted to start with the basics and then work our way up. So tell me a little bit about the story between, like, how did you actually meet Randy, and what was your first impressions and of Randy and Kelly, and how did you get started? I'm curious.
Well, it was at that Off Wall Street seminar. I was there. I'm part of another group that Randy is also a part of, and he said, "Hey, John, I want to talk to you." And so we went out and started discussing iFlip and what they were doing. And because of my background, I'm going, "Oh yeah, that's a given." And so not only do I have my own money there, I'm also an investor in the company. So we're taking investors if you're interested. So I
Right.
jumped
Yes.
in. I took that instantly. But and then about a year later, I think is when I met Kelly, and Kelly is that guy that when you get to talk to, you understand why Randy's the talker, but Kelly is where it all comes from. Okay, he
Yeah.
is so in depth, and we'll get into some conversations about whatever it is we're talking about, and talking to and I'm a numbers guy, and we'll start talking about the numbers and how things work out and how we can do that. It's a lot of fun. I really enjoy both of them a lot, and I've got to meet them and talk to them several times over the last several years. But um, that was kind of it. I mean, it was just kind of a chance meeting that we were both there, and like he said, when they started telling me about it, I started watching it and got in as soon as I thought it was appropriate.
Yeah, I can totally relate to that. My first impression was, I remember, for me it was more like 5 or 6 years ago when the company was just forming itself. It was very, very rough around the edges. Um, I was at the very, very beginning, and I remember they had there was a recording of a presentation where Randy showed, just like, what stood out to me is just like the iFlip performance chart,
Right.
and the quality of the video was bad, and I was very, very skeptical because I always hear about this kind of stuff in the trading, especially in the retail trading world, and I'm like, oh no, it's another one of those things. And then I looked closely. I was like, man, if this is true, then
Right.
these guys are outperforming my hedge fund
Right.
with with virtually none of the overhead and none of the staff, and they're just doing it with like a computer, with an AI cloud based um, automated trader. I was like, geez, this is so that got me interested. But just like you, I talked to Randy. I was like, this isn't a Wall Street guy. And then
Yeah.
he introduced me to Kelly. I was like, oh, this is the Wall Street guy. I was like, that now I get it. So
Yeah.
very, very similar kind of experience. Would I be correct in saying that you were sold right away on the concept of this iFlip automated investing tool, and you invested your money into it right away?
Yeah, pretty
Um,
much. We opened up some small accounts. My money was tied up, as I spoke earlier, was tied up in a bunch of real estate. So I really didn't start putting large dollar amounts till I actually watched it happen in March, what they
got
did.
it.
Okay, I saw them
So
jump out. Yeah, I mean, I had a small amount, and we set up my kids, and told my kids, if you need to start to open an investment account here, start putting as much as you can away. This is where you want to be long term,
mm,
uh, for all the benefits we already talked about. But a lot of my money was tied up, and so I actually sold a house somewhere around right before the first, right during the first quarter of 2020. And when that happened, it was sitting in the bank, and when the mark the portfolios were pretty much out at that point. And so
Right.
when it crashed, I transferred the money over in there, and it's been there ever since. And like I said, part of it's liquidity money. I use it for other transactions or different things that I'm investing in or different projects when I need it. Um, but it's worked beautifully,
That's
especially
some
when,
timing. I mean, I know
yeah,
you didn't plan on it. You didn't see the COVID crash coming. A lot of people think that that we like somehow knew that the world was going to change that year by being out of the market. Um, but obviously, it was just a technical analysis that the AI executed. But that's pretty awesome timing.
let's face it, in any category, you want to buy when it's bloody in the streets. So I went
Right.
into real estate in 2008 and 2010. That's when I went into real estate. I went into the stock market back in 2020. I just felt at that time I had the confidence in what they were doing that that was the right vehicle to be in, and they could. I mean, you're never going to pick the absolute bottom or absolute top,
Yeah.
but by look at his chart, you can show that it does a really good job
It's pretty
of
close.
picking up everything in the middle, which is all
Yeah.
I care about.
Yeah,
Yeah.
it's pretty close. It doesn't nail the top or the bottom. I don't think anything can all the
No.
time unless you get lucky every once in a while. But it does do a pretty good job of being pretty close very consistently.
Yeah. And so
Um,
the return I get for the risk I'm taking is, like I said, it's good enough to me that it beats my bank.
yeah, absolutely. So you got started at where you put in the majority of your money during that COVID year, that crazy year. And then in 2021, tell me a little bit about your experience in 2021, because I'll be honest with you, we got a lot of criticism for underperforming the S&P because 2021, if you just measure from January to December, the S&P went nuts,
Right.
and ours didn't quite do that because it was out of the market. It went in and out and in and out and in and out, and it missed the max. It would have been better off, hindsight being 2020, if we were just in the entire time. How did you feel in a year like 2021, given your experience and background?
Well, hindsight's always 2020. Okay.
Right.
And so I never really ever had a doubt about it.
Mm,
The way I was using the account and the way I think most people should use an account is that I'm getting a very good risk adjusted return. And so I'm not looking to capture all of it. It's an asset category for me, like everything else. So, I have a portion, I have less in real estate today. I'm actually selling one today, as a matter of fact.
oh,
But
good.
yeah, so I mean, I have less in real estate because real estate has gone really up, and I've got more over stocks. I've got more, a whole bunch more in oil and gas and other areas that I manage my portfolio in. So I never look at it as I've got to capture everything. That's not the purpose for me. The purpose for me is that you're getting me the return I can expect, but yet you're protecting me from that 10, 15, 30, 40% drawdown.
Mm,
That it pulls me back out if it's, and so I may take, I think maybe I've taken maybe a 5% drawdown at most that I can realize. And then I also use that money too for other things. I mean, that money will come out when I find another project that I want to go into. I'll liquidate and put it over there. So it's constantly moving in and out. Um, so I mean, it's not like I just keep it consistently every day in there, but I have no problem if I do. So if things don't move for a while, it's fine to just sit there and the software does well enough that I'm happy with it.
okay. In a year like 2022, it's kind of the opposite year as 2021 because the market is kind of in the toilet without the recent small rallies notwithstanding at the time of this recording. Some customers have felt, especially if they're new, they just got started, they want something to happen, they want something, they want to see gains in their account. They're Most of our smartfolios are down. They're just not as down as much as the S&P, and we're okay with that, but we understand that. However, some customers are I don't know if I should say frustrated, or they just maybe they don't like that the software is not doing anything, but they're paying a monthly subscription fee for whatever their tier is. How do
Right.
you feel about something like that in a year like 2022? you're still paying a monthly subscription, or maybe you front loaded it with a yearly subscription. I'm not sure, but you're paying for the AI to essentially sit on the sidelines in cash and do nothing. How do you feel about that? Some customers don't like it.
Well, and I'm going to tell you what, those customers um, need to understand what's really going on.
Okay.
So I told you about my mother's account for 10 years. That guy charged her 3% a year every year, no matter if it was up or down or made anything. Your mutual fund, they never, you don't see it, but go read it. Okay. They take a fee every year. What they don't realize is, number one, the fee that they're paying in this is, I mean, far and below anything that they would get anywhere else. Okay, but they need to get a little realization of what's going on. But at the same time, they're not subject to the market volatility that's going on, and
Mm,
they need to understand, what is it that's more important to you? Is it paying that? I think at one time I was paying a $79 fee a month, which is
okay.
nothing for the size portfolio I had in there. I mean, it's absolutely, it's less than 0.01%, I think. Okay, so I mean, it's absolutely nothing. But I think customers need to change their expectations and really understand what the software is, because it's not I'm just going to get in and make gains.
Hmm.
Nothing does that for you.
Right.
There are a few fixed income programs, but they don't, they don't have type of returns that the stock market does. So the key is, as an asset manager, you're trying to figure out, okay, the stock market's historical return is say 10 to 12% over the last 50 years, whatever that number may be. You're trying to grab as much of that as possible, and then I'm looking at trying to figure out, how do I get more return somewhere else on a different vehicle, considering the risk. Most of your customers that are having those issues, they don't really understand the product. That they're thinking it's just a go in and make money from day one. No, it's a go in and manage that asset from day one for you. And if
Yeah.
it looks like it needs to go up, it'll be in and start buying it, and then it'll go up. But if it's going to be choppy or go down, it's probably going to sit on the sidelines and wait for a better opportunity.
Yeah. Whenever I get those questions, and we get them quite a bit, and I always address it like, hey, okay, yes, you are paying for what looks like the AI software. You're paying on monthly fee for it to do nothing. That's what it looks like, but it's not doing nothing. It's always scanning and paying attention and looking for the opportunity every day. And it's just determining that right now, because we're a platform that only goes long, we only buy stocks to go up. We don't do the short side of things. We're looking for, like, when does the AI think it's gonna go up statistically likely, and it's not now.
Yeah, I mean,
And
I can remember a month ago when it was like, I get a notice that it bought a stock, and it sold it 2 days later. And I was talking to Kelly about a week or two later. He goes, "Yeah, we had a buy signal that only happens like twice since he's ever seen, but it took the shot." Last time it did that was in March of 2020. It worked out perfect, but it didn't work this time. It took the position, so it was working. And then when it didn't work, it got me back out.
right,
And
exactly,
maybe I lost 1-2% on that, whatever. But that's what the AI is doing for me. It's
absolutely.
actively doing that.
Yes, yes. So it's always working. So if anybody is curious, as we're having this conversation, your AI is always working for you, even if it's not actually pulling the trigger and buying a stock. Okay, so I'm curious now. Do you have any like favorite iFlip stories, where you were expecting one thing, or you made a mistake with another thing? Randy and I always joke that we play this game where we set aside a certain amount of money, a controlled amount of money, where we try to beat the AI, just for fun.
Right.
We haven't been able to do it yet. Do you do anything fun like that? Any fun iFlip stories to share?
I like you I did a stint as a trader, probably 15 years ago.
Okay.
I wasn't very good at it,
Okay.
but there's something inherently nature about wanting to try and gamble a little bit,
Yeah.
and so I do some options, and I do some,
Okay.
I'll do some other things. I've never been as successful as the AI is yet.
Join
But
the club.
yeah, I mean, and it's like, okay, and I never risk very much at all in it,
No,
because
of course. Of
I'm just
course.
not very good at it.
Yeah.
I don't have the discipline that the AI does, and that's what most people don't realize. And I've talked to trader friends, and it's like, 10% people make it because they just don't have the discipline to take the loss when they need to. And that's what the AI really makes you do. I mean, anybody can throw a dart, pick stocks, and jump in. I mean, you could have bought Apple over the last 20 years, and you'd have won. But would you have known how to get out of Apple at the top at 2022? No, you'd still be in it and down. What's Apple down 30, 40% this year? Something
Something
like
like that.
yeah,
Yeah.
something like that. So it's like, and so like, I mean, I play golf with a bunch of guys, and they're all talking about going back to work because the stock market's down so far that they're going to have to come out of retirement, that they can't stay retired. I don't want that for people. I want
No.
you to find a vehicle that you put your money in that, okay, well, maybe it's not working this month and it's sitting in cash. And why am I paying for the AI? It's because you don't want to go back to work when it's all done.
Hmm.
So
Hmm.
that's the type of vehicle I was looking for. And that's what I think iFlip is. I would tell you one story that it always just amazes me how fast I get something done. Now, I've tried to
Uh-huh.
move money out a couple of times, and for whatever reason, there's been a glitch in the software. And um, I'll call up one of you guys, and before I know it, in a day or so, we got it fixed, and my money's over me. So
Oh.
it's like, it's not that you're perfect. It's just that every time that it happens, y'all get it fixed, get it taken care of, and we go on down the road.
Oh.
And
Well,
that's where, I mean, you've helped me a couple of times. Randy's helped me a couple of times, and so it's like, y'all just get me taken care of, and that's as you could that's the only you can appreciate from anyone. It's not Things don't always work perfect, but you want an answer and you want to get taken care of best you can.
thank you. Well, we appreciate that. We appreciate you, not only as a customer, but also as an investor in the company. But we were also lucky enough to have you join us at the recent Mastering the Markets event we had in Dallas. Tell us a little bit about your experience there. You and I only hung out for a little bit at the end because I was busy,
Right.
running it.
No, I
um,
understand.
yeah, but tell us a little bit about your experience at Mastering the Markets Live.
Fabulous event. Really a bunch of great. It probably was. I think it was a little more different than I actually thought I was going to.
Okay, what were you thinking you were
Well,
going
I
to
don't
get?
know. I thought it was more of a separate assets category, not more, say, just strictly mastering the markets for its trading and some of the other guys that were
Oh,
there, which I was thoroughly pleased. I've loved that
okay.
sector. I've picked up a couple, and I even won one of them that I need to get out and do
Yeah,
the test with them.
you were one of our raffle winners. Yes.
Right.
Yeah.
Yeah. But I mean, I sent to both of my sons. I said, listen, guys, y'all know one of the companies that were there, y'all need to go talk to both of, go run their test and do it. Um, just because they keep asking me, well, how can I make extra money? Okay, here's a
Hmm.
perfect way to extra money.
Hmm.
So it was some great information. It was some really well received. I thought there was a great bunch of people. I saw some of my investors there. I saw some new people we got to meet, and we'll continue to work with. But just the information was top notch.
Awesome. Awesome. And last question for you. We want to keep it fair. Is there anything that you would like to see iFlip do better in the future? I mean, there's always room for improvement, and we always welcome any kind of feedback, good or bad, from longtime customers such as yourself.
Yeah, get the crypto program going quicker.
I knew that was coming.
I've been
Yes,
waiting that for months.
I
In
know.
fact,
You and I both.
Randy, I was on a presentation with Randy the other day about something else, and it was like, and so he popped a screen and it popped up, and I'm saying, "Oh,"
Yeah.
so I know that's coming. No, I mean, for me, I love the fact that I can grab my phone, hit the app, and see my account, and I
Mhm.
can transfer money, to my bank account if I need to, or I can sell money, I can add money.
Mhm.
I mean, I don't do a lot of trading anymore through the platform.
Right.
It's not really. I mean, I just don't have enough time during the day
Of
um,
course.
to do it. But I love the fact that it just works so seamlessly, and it kills me to leave money over in the bank at 0.75%.
I hear it's like over 1% now. They
Some
raised their yield a little bit.
Somebody actually at a recent seminar, we had sold a big deal on a business that we own, and somebody came up to me, and there's a rep from another company, and it was like, "Oh, John, we can get you 3%." And I'm like, "Yeah, no."
Thanks, but no thanks.
Not really looking for that.
Yeah. Right. But they're so like I gotta credit them, because agents like that, reps like that, they're very good at making 3% seem like we're doing you a favor. Like they're very good at making it sound compelling. And if you're not in the know, like you are, you were in the business, you understand how that works. And I'm lucky enough that I fortuitously ended up working at a hedge fund where I picked up these things along the way. If you're not in the know, you might think, wow, 3%, wow. And yeah, so it's kind of crazy just how that perception is
Well, I mean,
common.
yeah, and most people, and you know, whether they're my investors or just family and friends, most of them people are uneducated
Right.
about what is available. And so I would say that the person that's upset about the fees or it's sitting is that, maybe you need a little learn it's a little more education about what it's doing and what it's supposed to do
Mhm.
and what your expectations are. And so unfortunately, because I do have that background, my expectations are much higher than that. So I've just looked for tools, and iFlip being one of them that allows me to reach those expectations.
Yeah. Yeah, maybe we need to do a better job of laying that all out and leaning more into the education piece. We've done that bits and pieces here and there, but I think that needs to be a bit bigger staple of our message as a whole. Right?
Right.
Here's what it is, and here's what happens. Um, when it seems like it's doing nothing, it's still working, right? It's just not as visible as it was before.
Right. Because
That's
most people don't understand that to get the 10 to 12%, it was not that it did 10 to 12% every year. Some years it
right.
was 20, some down was up what 30, 40, 30 or 40% and whatever it was, depending on what measure in 21. So, it moves around, and that's an average. And most people have trouble realizing that when the average is on the downside or out.
Right, exactly. We're so used to a steady paycheck or like a steady cash flow or steady income. Bills are very steady, so we expect income and cash flow to be steady as well. And that's often, I don't know any hedge fund or any trader that believes that that's how this game is supposed to be played. So so thank you, John, for this
Definitely.
very wonderful conversation. It's always nice hanging out with you and chatting with you. Appreciate everything that you've done for us, and we look forward to having you at our next event. And hopefully, I get to catch you in person soon.
Thank
Uh,
you. Appreciate it, Aaron. Thanks for everything.
absolutely. If you like this content, please hit the like button and subscribe, and stay tuned from the next video from the iFlip YouTube channel.